Andrew, good to have you this morning. What are you anticipating this weekend, this long weekend, with, the prospect again of sort of broadly speaking, perhaps a lot of delays given those continuing labor shortages?
Well, thanks for having me. Look, it's going to be a busy weekend, no question about it. Let's hope the weather is relatively clear, and that certainly would make life a lot easier. We're going to carry over 20,000 people over these coming 4 days, so we're going to be really busy. It has been a tough summer. In all honesty, we haven't participated in that as much as others. We've run a 99% completion factor, and we've run very high on-time performance. So it has been a challenge for many, and we've had our challenges as well. Going to and from Florida in particular has been difficult, but for the most part, we've been able to deliver on our promise to our customers, getting them where they need to go on time.
We've talked a good deal, I think, even with you in the past, about a pilot shortage, raises in pay as a result, perhaps, to make sure you can actually get the labor you need. What are you finding in terms of being able to satisfy your needs for pilots, what you have to pay them, and whether or not that's impacting margins?
Well, yeah, look, pilots are earning more than they have in a long time, and that's just the market at work. So we adjusted our compensation about a year ago, and we offer a very competitive package. We offer some great quality of life attributes, and so we're in great shape there. We've got 120 pilots, and we're hiring each and every month, and we're doing a good job there. As I started with, the pilots cost more, and but that's okay. Everybody's going to have to deal with that. We're not in a bad spot there because we fly big airplanes. We're growing. The airlines that have the toughest time are the ones that fly much smaller airplanes, where it's harder to spread those increased costs over the fewer number of seats that you have. But we're in a good place there, and I expect to remain there.
So you're raising the pay for pilots. There's also the aspect of higher fuel prices. I know they've come down recently, but this year they've been much higher than I think you've seen throughout your career. You've said historically. How do you keep, the price-conscious consumer purchasing tickets to actually fill those big airplanes that you mentioned, just given the overall inflation dynamic and the fact that you brand yourself as a low-cost carrier?
Well, we are a low-fare carrier for sure, and we are a low-cost carrier. But from a consumer perspective, we offer incredible value. You're right; it makes it tougher when fuel prices are really high and some of your other input costs are going up. There's no question it makes it harder to be able to offer a compelling price point. We're all adjusting to this new world where some of these costs are perhaps structurally higher, or at least they are for now, like fuel prices. We offer great value, and it's a relative game to some extent. We also have to be really careful about how much capacity we put out there, because we do have to try to get more on the fare from our customers, and we're on our way to being able to pass that through. We're not there yet. It's been a big rise in energy prices, and we're continuing to do that. But look, I'm concerned about the consumer. Right now, demand is holding up really well. We like our forward bookings very much, but I am concerned about just the increase in everyday expenses and how that affects people's willingness to spend on travel. I will tell you that over the course of my career, we've seen this time and again. People will not give up their trips. They might travel a little bit less frequently, but travel it's discretionary, but it's almost not discretionary for the American public. There's such demand, and there's so much value to it that it's the last things people give up before when they're cutting back on things.
Shepard Smith here. Thanks for watching CNBC on YouTube.